Hello guys, it's Max here from Daily Market Movements, and today I'm going to be finishing the third video with regards to the 5 videos that I'm doing for you guys, where I explain the top 5 most important trading indicators that you guys should use on a daily basis in order to become a successful trader. But before I start this video, I just want to make sure that you've seen my first and second video where I covered support and resistance levels, and the second video I covered the up and down trend. So if you haven't had a chance to watch them videos yet, then please go onto my YouTube channel where you can then find them. So today I'm going to be covering one of the most important technical analysis indicators that I use and some of the most successful and most profitable traders in the world use, and that is the RSI. And RSI stands for the Relative Strength Index. So what is a RSI indicator? Well, the RSI indicator sits at the bottom of your chart. It's just like a nice little channel pattern at the bottom of your chart, and basically what it does, it tells you whether a stock or a forex pair or a commodity is overbought or oversold. One of the main reasons as to why traders lose a lot of money is because of FOMO, the fear of missing out. You might have a stock that's rallying, it's been rallying now for like 3 or 4 days, and traders gone, oh yeah, it keeps going up, and they've actually got in it at the high end of it, and then as soon as they get in, the market starts to come down, and that is because this stock may be overbought. And it's the exact same story on the downside. You might have a stock that's fallen and people go, oh my god, it's crashing. They've hopped in, and then they've actually hopped in where it's actually considered to be oversold, and then the market has then pulled back and they've actually ended up losing money. So I'm going to go and show you how to adapt the RSI to your trading accounts and use it to your advantage to help you become a successful and profitable trader. So if you come with me to the trading screens, and I'm going to show you how to adapt it into your trading accounts. So guys, here we are on the live charts, and as you can see in front of me, we have the euro over the US dollar chart dating back to around about 12 months. So we have the price move of the previous 12 months. And just before I start this video, if you are looking for a website where you can come and draw these nice charts, then I do recommend visiting our website, www.dailymarketmovements.com. Once on the website, you'll see that we then have a charts page. Just click on the charts page and it'll guide you to this page. And up here you can find any asset that you want. So as I mentioned before, we have the euro US dollar in front of me, and I'm going to quickly teach you how to insert a RSI indicator onto your chart. So here I'm looking at this chart in the 1 day time frame, and what I'm going to do, I'm just going to come onto the graph and I'm going to right click, and then as you can see it says insert indicator. Also, many graphs have this symbol as well. You can equally just click there, and then what I'm just going to type down simply RSI, and there we have it, the Relative Strength Index. Once you click on there, this channel at the bottom, remember what I said just a minute ago, but it's like a small channel at the bottom of your graph. Well, this is the RSI. So 2 of the most important things that you need to know with the RSI is that when the RSI reaches over 70, so as you can see we have a little price, like the price of the RSI down here. Once it reaches above 70, so there's a channel here, but then the market is considered to be overbought. And when it goes below 30, which is out of the purple to the bottom side, the market is considered to be oversold. So why is this important to know? Well, let's just zoom into this chart now. As you can see, we experienced some large volatility about a month ago in the euro US dollar with a lot of choppy trading. And as you can see, I'm just going to highlight, for a short period of time, the euro US dollar was considered to be overbought. So, a lot of traders, trust me, a lot of traders would have hopped in here and thought, oh my god, yes, the market, because the previous video where I taught you about the downtrends and the uptrends. Let me just draw a nice little downtrend here. There you go. So as you can see, we've been in a downtrend now for about a year and a bit with the euro US dollar. So many traders, they would have seen the fact that we broke out of this, out of the top side of this downtrend that we've been in for such a long period of time now, and they would have bought. However, if you would have looked at the RSI has indicated that actually the market could be running out of steam, as it's considered to be overbought. So there wasn't actually much legs left in the market. So many traders would have got hurt here from buying the market, thinking that the market's going to break out, where actually the market actually ran out of steam, and as you can see, it dropped back into this toxic downtrend. So where a lot of beginner traders bought the market here, I actually sold and I made a great profit, because as you can see, when we were considered overbought, we went all the way back down to that 30, where the market was then considered nearly oversold. So let me just highlight that. There you go. So the market was considered oversold. And what happened? Once the market rebounded off the bottom of its downtrend and the bottom of this RSI level, the market then rebounded back to the top of the downtrend. So this is why the RSI is a great indicator, and you can use it to your advantage to profit. You know, we had the same story here when the market declined at this area here. You know, the market was considered heavily oversold. Let me just highlight it here again. And what happened? A lot of people, you know, they would have probably sold around this price here, thinking that it was going to challenge the bottom of this downtrend. And as you can see, a lot of traders would have actually been buying. Lots of experience and professional traders would have been buying due to the fact the market was considered to be oversold, and therefore they would have placed in buys. And look what happened. We had that massive rally, which did cause a false breakout to the top of the downtrend. So I think it's pretty obvious now how you can use the RSI to your advantage to profit from these volatile markets. And you know, a great example of this is that when the market was considered to be overbought on the RSI, as I mentioned before, I placed some sell positions here. So I'm going to put a blue line where I entered the market, and as you can see, I would have sold where it was considered overbought. And then as you can see, the market just shortly after that declined back into the downtrend, where it nearly come into contact with the oversold indicator. So when we were trading down near that level there, I would have chosen to take profit because I would have known that the market was running out of steam back towards the downside. So I would have taken profit at around there where I'll put a green line. It's just as simple as that. And then when I knew that the market didn't have much more room to run to the downside, I would have then opened another trade, which I'll put in blue, which would have been a buy position, let's say there, and then I would have taken profit back up towards the top of the uptrend because I knew that there was some sort of resistance there, so I'll just put a green line there. And this right here is how you can use the RSI to your advantage when trading the market to the downside and the upside. As I mentioned before, some of the most successful traders in the world use the RSI on a day-to-day basis. It's a must-have indicator if you wish to be a successful trader.
So guys, there you have it. I've just explained to you guys what the RSI is, how to adapt it to your trading charts at home, and most important of all, how to use it to your advantage to profit from the markets. So that's it for the third video. We still have another 2 indicators that I would like to tell you guys about. So the next video, I'm going to be looking at the EMA moving averages. This is a great indicator to use to know where the market could potentially run into some resistance or support. So it's really important for you to know, so you know where to target your trades for your take profits. So the video is here, so just click on this video here, and that will take you over to the 4th step of the 5 top indicators that you guys need to know about. Thank you for watching this video. Please subscribe to my channel and give me a thumbs up. Thank you.